It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Hey, welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the smartest man in the room, Mr. Michael Becker.
Hey, Paul.
Michael, how are you?
Doing good.
Welcome back to your old podcast.
Yeah, it's good. It's good to be back.
So, everything going well for you?
Yeah, I can't complain. It's a little slow start to the year. We're recording this in February 2019, and there's not as many deals out in the marketplace today. So just trying to work twice as hard to get half the results anymore. So hopefully we can get something unstuck here shortly.
Yeah, you guys just came back from the National Housing Council meeting out in San Diego. How did that go?
Yeah, I thought it was pretty good. There's a lot of interest. My kind of high level takeaway is a lot of money, not as many deals. So seemingly, I just focus on the markets in Texas, Dallas, Fort Worth, and Austin. But, it seems like and in particular in Dallas-Fort Worth, there's probably, maybe 25, 30% less inventory actively on the market today than I would say this time last year. So, but it seems like every broker I talk to have 30 BOVs that they've gotten out. They just haven't had any listings signed up. So maybe it's a thing that in, March, April, May, we're going to start seeing a whole lot more listings just as this moment in time. The first couple of months of the year, there's just not a whole lot of inventory out in the marketplace. And then from the capital perspective, it just seems like there's an abundance amount. It's even more so than even the previous years, which it's always been quite a bit of capital for the last, 3-4 years chasing multifamily and in particular in Texas. And so it seems like that everyone's pockets are full and not too many places to place it in the current moment.
Paint a picture for somebody who's never been out to San Diego or Orlando, kind of going back and forth about that National Multifamily Housing Council meeting. Is it something for the newbies to go to, or if you've been doing it for a while, for you to go to? What's it about and who should go?
It's basically all the major ownership groups across the country, and then all the major brokers across the country all go meet at one place, and they alternate between East and West Coast, between San Diego and Orlando. So this year was in San Diego, which is the preferred one of the two for sure, in a cool downtown setting. And basically at a conference room where they have all these events and people speaking, and they talk about state of the market and these different topics around multifamily. And no one goes to any of these events except for like the analysts that work for these large institutional ownership groups. So all the principals and all the brokers are out in the hallway. I'm having meetings or upstairs in some meeting rooms, taking meetings with people. And it's kind of like speed dating is what I kind of describe it. So if you're an ownership group and you own in multiple markets, you can go to this one location at one time and meet all the brokers across the country and talk about kind of what you're doing, how last year was, what's going on next year. And then they tend to have a lot of deals either marketed and on the market and listed, and they kind of show you some flyers about those deals, or they might have some hip pocket deals or tell you about some future opportunities that might be coming down the pike. And it's a good place to do that. If you live in one market and you only buy properties in that one market, and I don't know how much benefit there is for you to go. If you just live in Dallas, you only do deals in Dallas. I don't know how much benefit that is because you just go meet that broker back home in Dallas. Right. But if I lived in Los Angeles and I own property in multiple markets across the country or in Texas, and all the Texas brokers will be at that place with every other broker from all over the country. It's pretty efficient use of time to go network. And then at night, kind of my more preferred method versus having all these little speed dating meetings. All the brokerage shops tend to have these large parties. So you go to the brokers' parties, and all these clients and all the brokers for that shop are there. And there's a whole bunch of like dinners and more informal things, and just kind of meeting people for a drink. And so I tend to not try to have meetings before noon every day the next day because I tend to stay out a little bit later. But it's a great conference.
Yeah, how many people do you think attend or go to those conferences?
If I had to guess, there's probably between 12 to 15,000 people.
Yeah,
it's
a big conference.
I mean, it's not only the owners and the brokers, but it's every service provider, all the lenders. We had a meeting with, Fannie Mae, had dinner with Fannie Mae one night, the management companies, insurance people. I mean, anyone and everyone that's a player that's there.
In fact, you're so important that you actually spent some time with the president of Fannie Mae.
We've borrowed that much money that we got at least a small audience with them. So it's been good. But yeah, I think if you just own a deal or two and you're in one market, I don't know how much benefit it is. But once you start scaling and you do this kind of full time, I think it's certainly something to be on the bucket list of things to do. Like I don't know exactly how productive it is for me, Paul, but I'd feel like I'm missing out if I didn't go. to it. And, it's just, you never know, one little conversation, one little dinner that you had with somebody, a year or 2 years down the road could come back and you just met somebody you didn't know before. And all of a sudden they're on the other side of a transaction for you. And it tips the scale in your favor. That could certainly be worth your trip out there for sure.
So great information from Michael Becker. As you know, Michael is the former banker that made the transition to ownership a number of years ago and now manages and owns thousands of apartment buildings. So his group over at SPI have done a great job. So the question for Michael today, really on the operating side, is, Michael, I'm buying an apartment building. Should I ask for the phase one, the appraisal, and the bank statements?
Yes. When you're buying a property, and we haven't referenced it in a while, but when you buy a property, you typically submit an LOI. That's when you kind of do your offer and attach the LOI. Every LOI we submit is kind of a due diligence checklist. So it's kind of like Christmas, right? You ask for everything, and sometimes you get everything, and sometimes you don't. So typically on the list is all those things. Usually the seller doesn't give up an old appraisal. I don't know how much value an old appraisal really has. If they got an appraisal from 3-4 years ago, that's at that market time. So who really knows what it's actually worth? So we typically don't get appraisals, but usually we get a copy of the old phase one. Certainly we try to get copies of the most critical diligence for us really is getting a copy of all the service contracts, always the must assume service contracts. We want to make sure we see those so we know what we're getting ourselves into. Try to get copies of all the utility bills. So we try to do an audit to make sure that the electricity and water bill that they're paying matches what the actual bills say. And then we always do our best to get a copy of the bank statement so we can try to match deposits up with revenue, because you're buying these things off unaudited financial statements. So we're trying to do our best to do our diligence to make sure that we're as close as possible getting into the deal, and what we're buying is kind of what's represented on paper.
A phase one. Tell me again what a phase one is.
It's just an environmental study where an environmental engineer will go scour the databases, the public record databases, and do a limited site inspection. They're not doing sampling or anything to see if there's any visible concerns for any sort of environmental issues. As long as the database is clear and there's no obvious, toxic waste on your property, usually you get a clean phase one. If there was if you're next to a gas station and there was a historical leach of the underground storage tanks and it got onto your property, potentially you then have to do a phase two, and then you can have some other issues that you might have to remediate or get into some sort of state program. But usually it's not a big deal in multifamily. Most of these were just, especially Texas, was just a open prairie, a farm or a ranch at some point, and they built apartments on it. If you're in more like older cities, urban infill, kind of repurposed, redeveloped, it'd probably be a little bit more of a deal. But in Texas, it's usually not that big a deal.
Yeah, usually a phase one would probably be anywhere from say $3,500 to $5,000 again to do that environmental study. Phase two can be anywhere from $12,000 to $40,000, and then they may ask you for a phase three, which you'll probably walk away from the property.
Yeah,
because you don't want to spend a lot of money.
Yeah, but fortunately, it's not a big deal, and most of the deals that very, very rare occasions that come up to be an issue. But more than that, it's kind of really the financials that we're trying to be a little bit more diligent. Most of the contracts you'll have a carve out. Even if you're hard on earnest money, you have a carve out for unknown environmental issues. So if you get into the deal and you find something during your diligence, so even if you don't get a copy of the phase one, usually there's a carve out. If you find something when your lender does a phase one, you can get your money back or renegotiate or whatever. So I'm more focused though, Paul, on trying to get the bank statements, utility bills, must assume service contracts, just trying to make sure that the financials that they represent are truly what we're walking into.
Yeah, just one more time with that phase one, even if you can't get it, and sometimes the sellers may not have it because typically at the end of the transaction, when they bought the property, they had to request it. That doesn't usually come in the doc package of information after the loan closes. So they may not have it. So I would give them a pass if they don't have it. But make sure your attorney puts language in the purchase sale agreement that if there's anything comes up in your phase one, the brand new phase one, that you can walk away from the deal if you don't like it, if something was tagged as a problem.
And we've done deals where we didn't have that, so we would just have to kind of quickly do a phase one light, so just kind of engage through the lender, have them and talk to their engineer to make sure they do at least a high level database search so that when we sign the PSA and earnest money go hard, that we don't have anything to come back as a surprise. So it's not a perfect world out there. If you guys are interested, we did put a copy of my sample due diligence checklist, which is on the Old Capital Podcast website, which is www.oldcapitalpodcast.com. That's on there, as well as the Multifamily Finance 101 kind of white paper. But feel free to go there, kind of take my letterhead off and plagiarize that. That's kind of like my Christmas wish list of all the diligence items that we ask for when we do these deals. And usually we get the majority of it, but depending on the seller, you don't get everything you want all the time.
So if somebody wanted to get more information concerning what SPI is and what they do, what's the best way for them to get in contact with you?
Yeah, the easiest way to find more information is simply go to the company's website, which is www.spiadvisor.com. And that's SPI like spy, advisor.com. And there's a contact us form. And if you fill that out, I'm always happy to have a 10 or 15-minute telephone call with listeners of the podcast.
Can you just explain one more time? Because I like what you guys do with that SPI advisory of trying to assist people that may have a couple $1 million that they want to place to work. And how do you guys help them out on that?
Yeah, the majority of what we do is just find high quality deals, tie them up, and then go raise capital to put them together, and we kind of operate them. Kind of what we do also is our advisory services. So if you have $3 to $5 million minimum, and you're looking to go place it and want to own your own property without having partners, what we do is we kind of help people that are kind of from out of the area come into these deals and kind of use our connections or relationships. So we'll help them identify the deal, help them underwrite them, help them place debt, and get them set up with all the service providers they might need in the marketplace. So kind of the value proposition to the brokers is this: our clients' money, but our execution. So we kind of help shorten the time frame and open up some doors that might be closed to you. So if you guys are interested, you have at least kind of like $3 to $5 million on the low end in equity to place into a deal. That'd be something that's certainly worth having a brief phone call about.
That's great. Always good to get great information from Michael Becker. We appreciate that. Again, if you thought we brought value to you, please go back to the iTunes and give us a 5-star rating. We would appreciate that. Again, we get 45,000 downloads a month, and I wish we had as many people to give us 5-star reviews that actually listen to our podcast. So we appreciate it again. Michael Becker, smartest guy in the room. I'm Paul Peebles. Have a great day.